very good morning from London. Welcome to the RANsquawk European morning briefing for today, Monday the 12th of September. Hope you've had a great weekend. Eurozone debt contagion fears do continue then, with spurring some risk-averse trade in the markets this morning. The rumoured Greek hard default over the weekend has not materialised, but some particular focus is coming into the commentary regarding that from the weekend press. The German finance minister in the German press is reportedly already taking measures to guard against a Greek default for the German economy, particularly for the German banks over there. We've had a warning out from Moody's on the three main French banks, SocGen, BNP Paribas and Crédit Agricole, all facing a downgrade early as Thursday as Moody's confirms its 90-day findings of its review there. And also an interesting article in the ST this morning saying European banks have a dollar funding gap of around $500 billion, and we have seen that reflected in the increasing LIBOR fixings over the last few weeks. So banks very much in focus, and they have been weaker across the board. The weakest sector across the European indices, equity markets, particularly the CAC 40, down around 4%, following the weakness in the French banks, all down around 10% there. And looking towards the currency space, euro-dollar has been trading in the Asian session below the 135 handle briefly, following a brief bounce back up to around the 136, but euro generally weaker across the board. Just worth of note, the Aussie currency has been weaker overnight also, following the release of the Australian trade balance coming in lower than expectations. Just one thing worth of note for the UK banks, we saw the release of the ICB report early this morning confirming that their retail arms do have to be ring-fenced. However, given a time frame of around 2019 to implement these changes, and also a potential cost of around £4 to £7 billion for the main UK banks, they've been slightly outperforming their European peers, Lloyds and RBS, in some positive territory, with the ICB report coming in slightly softer than market expectations, and therefore helping support the UK banks slightly. Looking towards the fixed income markets, we have seen Italy and Germany both come to the market with T-bills, Germany having a quite low yield for its Boo-bill auction, up 0.18%, so showing some safe haven flows there. Italy, however, on their 12-month BOT, paying a high yield, which is the highest since September 2008, so some slight concerns there for Italy. The real test for the country will be tomorrow, however, as it taps its main bond auctions tomorrow, looking to raise a quite hefty sum, and will be a big test for the market, so a lot of focus on tomorrow. In terms of the calendar for the rest of the day, we have gone through all the main European data, so it's relatively quiet, looking for any potential comments from speakers and any further commentary regarding Greece and the Eurozone contagion fears, especially with German Chancellor Merkel meeting EU President Barroso for some crisis talks, so we'll be keeping a close eye out for that. But that's enough from me. Have yourselves a great trading day.